Ladies and gentlemen, in this video, I'm not going to be talking about something I would normally talk about. I'm not going to be talking about the next Tesla, the next Nvidia. Instead, I'm going to be talking about a healthcare stock. Sometimes the best stocks to buy aren't the ones that look all flashy, but are the ones that actually make money. United Healthcare actually does that and consistently increases their earnings over time. That's why it's one of the best performing stocks of all time and is the 12th largest stock in history. The reason why United Healthcare is such a good stock on whatever time frame you're looking at is because it has one of the best return to risk ratios over time in the entire stock market. To put this in simple terms, it's a stock that grows steadily and doesn't have a lot of fluctuations. United Healthcare has returned 23% every year on average and has only deviated from that 16%, whereas a company like Meta has grown 14% a year but has deviated 32% every year. Now, why I think right now is such a good time to talk about United Healthcare is because everyone else is talking about the Teslas, the Nvidias, when in reality, they have gone up a lot, and it's not to say they can't go up more, but right now United Healthcare has reached some pretty serious lows that may be a turning point. The reason I say this is because of something called relative strength. Now it's calculated through a really complicated formula, but you can really just think about it as the ratio between how much it's being bought and how much it's being sold. Historically, when it reaches levels of 30, that marks a good buy, and vice versa, when it reaches levels of 70, that marks a good sell. Right now, United Healthcare just bounced off that lower level and hit 30 and is now on its way back up. This could mean it could be a good buy in both the short term and the long term. This isn't financial advice, but it is something worth considering as it does have incredible returns with a low amount of risk, and it does well in the long term. Now, lastly, and maybe most importantly, this stock makes money. Its most recent quarterly earnings per share came in at around $6 and usually has steady growth in its earnings every quarter. Now, something cool you can do is compare how much money the stock's making, which is called its earnings per share, versus the stock's price. So you can see how overvalued or undervalued the stock is based off of its earnings. And right now, United Healthcare has a price earnings ratio of 21. And anything 20 or under is considered an excellent buy. If you enjoyed this video, make sure you leave a like and subscribe, and I will see you in the next one.